The resounding narrative, Florida's housing market is on the brink of crisis. With housing inventory skyrocketing, home prices stagnating for 2 solid years, the market here is teetering clearly on a major shift. Are we about to witness a catastrophic drop in price like we did from 2009 to 2012? And again, an often missed micro crash that we had in 2022? The data doesn't lie, and the update that I have for you today should concern every homeowner, every investor that owns a home anywhere in the state. We just got fresh data from the Florida Association of Realtors for the end of moving season for the state of Florida. And by the end of this video, you're going to have a very clear pulse of exactly where Florida is right now in this entire changing narrative. If you want to stay ahead of the curve, dive down below and smash that like button and consider subscribing to the channel as I have continuous updates on real estate in the context of Florida. Let's get started.
Change is coming, my fellow Americans. You will own nothing and you will be happy.
Many folks find themselves on two sides of the coin as it relates to the Florida housing market right now. On one side, you have a huge growing base of folks who've just decided to rent for now, or rent by default because, as Redfin recently pointed out, the rental class is growing by triple the rate of those getting into homeownership. And that's clearly evidenced by the fact that we recently saw an article from Business Insider who pointed out the fact that in the face of surging inventory in Florida now, 70% up year over year, and it's been a 2-year steady increase of massive supply of homes for sale. We had a record recent 59,000 cancellations of contracts in July as buyers go under contract, count all of the hidden costs associated with buying a home, and then cancel the deal. Now, this hit very close to home as multiple cities at the very top of the list nationwide were here in Florida, with Orlando leading the pack. 1 out of 5 buyers canceled. Many of them never came back to the market. And why? They decided that once they put the home under contract and went through inspections, several things need to be fixed in order to get any insurance at all. And in many cases, when they could finally get insurance after the high cost of establishing the home structure and mechanicals, they would find out that it's $5,000, $6,000, $7,000 a year to maintain insurance. Not to mention that condo purchasers all across the state are finding that HOAs are going up by leaps and bounds. 15 to 20% year over year still being reported here recently in Florida. Now, sellers have a completely different position in this market. They're looking at everything saying, hey, you know what, Jared? We've had interest rates. The 30-year fixed has fallen from 7.4% down to 6.4% in the past 90 days. Happy days are here again. Sellers further say, hey, Jared, hold the phone on this entire recession business because Jerome Powell, I just heard the comments. I heard this man's pivoting and we're going to see the central bank cut rates. Let's take the interest rate piece for a second. Interest rates are nearly 1% down over last year, yet sales across the country are way down against last year. Most recent report of Redfin, and this holds over to Florida as well, nearly 6% less contracts than a year ago. Buyers are less active. Buyers are not qualifying for mortgages, and buyers are avoiding the purchase process at record low numbers. The craziness of the buyer pullback, this buyer strike that we're seeing, can't fully be grasped until you realize the fact that there's hundreds of thousands of finished new construction homes. New construction homes that you can go out and buy for a 4% 30-year fixed interest rate because the builder is willing to throw $30,000, $40,000, $50,000 behind your purchase, something that the used resale market cannot do. So Jared, all those new homes are flying off the shelf, right? No, you'd be wrong. New home builders' existing supply of finished homes they're paying interest on, are stacked up at levels they've not seen since 2009. The notion that lower interest rates is going to help is flat. And by the way, many of you sellers that are hoping that Jerome Powell changing the interest rate on the central bank rate in September by most likely 25 or 50 basis points is going to somehow massively peak some stimulus in the housing market, you have to understand that the rates themselves having dropped for the last 90 days, that is the price in now, that's the built-in effect of the coming rate change. The change that we expect is already here. It starts in advance when the market expects it to happen. Now, as much as many people see my thumbnails and they say, fear sells things, listen, I don't have a dog in the fight. Yes, I believe asset bubbles are phony, speculative, phantom revenues that exist in the space that eventually the air gets let out and the bubbles pop. So again, my interest is not here to root for a housing bubble. My interest in the data and the markets themselves is purely abstract. But again, in the history of time, all bubbles pop. It's a matter of time. And right before every bubble pops, there's always a declaration that this time it's different, that this is some quote new normal, and that we can only expect the prices of all these assets to continue to new heights. For instance, in the real estate industry, you hear the narrative constantly that there's a permanent housing shortage. We're millions of home sales behind. Yet if you look at a simple graph of our housing units versus our population, which I'll try and throw one on the screen, you will find that we have more houses per capita right now than at any point in history. And I just told you the narrative below. You can go buy a house from a builder right now who would pray for you to take it off their hands. So much so that they will buy your interest rate back down to 2022 with a 4% 30-year fix and pay your realtor like 6% to help drag you into the sale, yet they still cannot sell them. And as I told you that Redfin pointed out, people are opting in to rent. So before you get sold on the idea that consensus says that there's a shortage of properties and so demand can remain high and prices will go even higher, the nation again has more houses per capita than ever before. And before we jump into the Florida data, let's talk about this Jerome Powell pivot for a second. Hear me on this. There have been 15 rate cuts, 15 so-called pivots of the central bank on record. 11 out of 15 times a recession manifested out of that rate cut. Not because of the rate cut, because the central banker says trouble's ahead, iceberg ahead. Now, why is this the case? Because the central bank has data and insight and education and all kinds of other things available to them. And they do this when they see an employment nightmare coming in the works. You look at the history of all the rate cuts on record, and you will see that in the 3 to 6 months following those rate cuts, unemployment surges off the charts. So now you have sellers that are somehow pausing. You have sellers in the marketplace that they have their house out there and it's languishing for months. And then they hear the Fed pivot and they say, oh, maybe this is a chance that I can slow play this and take my time. When in fact, what you should hear when you hear a Federal Reserve chairman saying he's going to pivot is that you've just heard one of the best recession indicators of all time. But why is he pivoting now? Okay, the goal of him raising the rates was to fight inflation. Has he beat inflation? Absolutely not. One of his best records was recently, it was 2.9% year over year. And we already know none of that is coming out of shelter cost. Shelter cost is raging expensive, it's still unaffordable, and it's still breaking the middle class. One thing you also need to understand is Jerome Powell is making this decision after unemployment has shifted much higher than in times past. What I'm saying is that unemployment data got a lot worse this time before he hit the lever. That's what everybody's freaked out about, is that maybe he waited too late and that recession's going to be really, really bad. Unemployment this time around is up 21% year over year. If you look at an average of the past, they raised rates after as much as a 4% change. You should also note that this time around, Americans have significantly less savings than they did in 2007 and 2008, as in 300% less. Back then, folks had around 10% in savings. Right now, we just have 3%. And a buttload of credit card debt. But yeah, everything's fine. Housing's going to go up. Don't worry about it. There's no iceberg debt ahead. And listen, I'm not trying to freak you out. The point I'm making is you need to look at the signal for what it is and avoid the noise. The signal based in history says things are going to get a lot worse for the economy in the next 6 months over being better. And I'm purely saying this so that you can make good decisions from where you are. And I get frustrated even worse when I see people in power who have the information to share this with the public and they don't do it. I think of the CEO from Bank of America, Brian Moynihan, who at the end of 2023 was sounding the alarms, like recession's gonna be bad going into 24. And then in the past month, he comes out and is doing interviews saying, oh, you know what, recession's off, it's not here. All of this while one of his largest shareholders, Warren Buffett, secretly sold billions of dollars of that man's company. And thinking about the idea that housing and stock and assets might really be speculatively out of control price-wise, think about the fact that Warren Buffett is sitting on nearly $300 billion cash. And you know, an investor like that, he can't sell things overnight, who through the second quarter of this year has been secretly dumping massive amounts of mainline industry stocks, Apple, Bank of America. And what cracks me up is how often I see realtors and lenders go on social media and post Warren Buffett's comments about being fearful when others are greedy and be greedy when others are fearful. They were posting this all year to kind of tell buyers like, hey, I know everybody's fearful, but this means you should get in and just make your move. All the while, the Oracle of Omaha is bailing out of the market. Sounds like you got the quote backwards. But I digress. You're here to talk about Florida. Let's get into the data. There are some crazy anomalies that just took place through moving season. Let's check them out right now. All right, everybody, I have Florida's active inventory up here on the screen. In Florida, you have to understand the real estate market typically follows predictable seasonal patterns. The year often kicks off strong in January and February in terms of inventory. So every year, inventory in Florida is elevated. It starts off the year high. As we come into moving season from March to July, you see a peak in movement as people are getting tax returns back and there's people's kids are out of school or they're going on in planning vacation. They want to get those houses swapped while they have time between end of school year going into summer. The easy thing to think about momentum of moving season is really spring to early summer, peaking around June or July. And after that, the activity tends to taper off as people finally get to summer vacations, back to school shopping and preparation, and ultimately going towards the end of the year, everything really kind of tails off. Inventory towards the fall, kind of what you can expect going to the end of the year in Florida, it goes up again because buyers are distracted with holidays and Thanksgiving and all this kind of thing. And ultimately, inventory sweeps back up beginning of the year. But notice, my friends, something interesting that has just taken place. Now, this is a chart for active inventory going all the way back to 2015. Now, you're going to notice that there is a significant departure in the usual pattern, usually seeing summer selling down inventory. Instead, Florida went from around 146,000 homes, which should be the high point of the year and should have dropped down towards the right. We finished moving season with 25,000 extra homes, 166,163 homes, which if you look, folks, this is nearly a decade of time. You can see that even in normal conditions back here, we usually hung around 150,000 units, maybe bumped a little bit ahead of it. But look at what I'm talking about. See, early part of the year, January, February, goes down in the summer. January, February, goes down to the summer. But look what happens after summer is over, going into the end of the year again. Inventory always cruises back up, which again, this could create challenges, big time challenges for sellers as we go into Christmas. We are already at a point where instead of having a downward drawdown before more fall season listings hit the market, picking things back up higher as we go into the normal pace into January, this could mean that if we hit the typical seasonal push, all the factors I just unrolled in the introduction, that we could see our inventory pushing above 175, 180,000. These are numbers we've not seen in Florida in probably 12 or 13 years. We will see incredibly high inventory if we just see a natural flow of the season, which honestly, buyers, for that to be averted, for us to avoid 175, 180,000, like 12, 13, 14 year highs, we have to see a massive return from the buyers. And it's just not in the cards. I just not see how it's even possible. Now I've pulled up Florida's average price. You can see that really for the past 4 months, moving season, peak season, the point where sellers are supposed to get paid, look at it. It's absolutely cratered since April. It's going down. You see a moment in time back here on the graph where you see something similar happen? That's right. This is reminiscent of what we saw in 2022. Those who were actively buying and selling, if you were back in that time, as interest rates went from like 3% for a 30-year fixed all the way up to 7% in about 4 or 5 months' time, you'll recall the sudden surge in inventory as Jerome Powell aggressively raised interest rates during this time. Now, what most people don't know is from the peak of that summer to the end of that year, this move eroded prices by 9%. Think about this. Most people would say, well, Jared, isn't there like a seasonal downtrend towards the end of the year? You'd be right. But that move, this move in price, while it doesn't look like much on a graph, we were around 550,000 in average price. Our average in the state went into the 480s. That move was 3 times bigger of a drop in sweeping average price than we would typically see on a given season. Now, hear me on this. The reason why that is past history is because the market only managed to recover 2022 because the broader economy received a significant boost. And this was largely because of Washington's aggressive borrowing. And listen, despite political rhetoric, this is the kind of spending that creates a de facto market stimulus. And this was particularly evident from early 2023 when we had the war with Ukraine start, really all the way till present. You're hearing about it now when you hear about $1 trillion added to the deficit every 100 days. That on its own is creating productivity, which is seeping into the market. And I believe it's also hurting Jerome Powell's goal of trying to drive down inflation. But again, when we're inside of a conflict or something like that, it's easy for Congress to write big, expensive bills that we all have to pay for. And ultimately, that's what spared us in 2023 from really spiraling worse. My friends, 2022 is a great precursor lesson to what's coming because I'm going to show you some interesting insider data of what should be unfolding in the fall that can kind of give us a clue of just how much prices could dip in Florida. You're going to see that here in a minute. All right, friends. So the next graph I want to show you is closed sales. You can see that in the history. This is, again, going back to 2015 on the far left side. But if you look at like 2018, 2019, you can see that there's a lot of time spent around the 40,000 per month line. You can see down here that a lot of the time is spent around 35,000 at the most, and we don't even hit 40,000 closings. Consider this. Remember back, we have a staggering 70% increase in the active number of listings. Closed sales are trailing even behind 2023's numbers last year, which were a marked 25-year low. Again, buyers are on strike. It is a buyer problem. And even though we do have listing inventory peaking a bit higher, people, for whatever reason in Florida, decided now's the time to put my house on the market, that despite an abundance of available homes, the market isn't seeing any activity that you would expect. Buyers are hesitant, and this is likely due to massive economic uncertainties, rising interest rates, and then just in Florida, we have broader economic issues that really are localized to real estate. And that's not even touching the notion of Airbnb and how much the income revenues are way down for Airbnb, which is affecting the ability for owners of those properties in Florida to maintain them. Many of them are forced to sell. All of these, from the condo issues, HOA, all of it is a multiplier of issues. Now, this was a massive shift in narrative because you'll remember back in 2023, everybody was saying the reason why buyers are backing off is because they just don't have anything to choose from. That's obviously not the problem anymore. It is clear that the buyers are on strike, and this is going to be a critical factor in understanding the current market dynamics and what just might lie ahead for Florida as we go into the fall. Now, let's try and theorize for a moment. Let's try to make some predictions based in data. How much, if we saw a 9% crash down in price in 2022, based on where we are in all these critical factors, what could happen in the fall season of 2024 going into 2025, based on the fact that we are way higher in elevated supply coming out of moving season, heading into the slow fall season, based on the fact that closings are down in 2024 versus a year ago, which, as I mentioned, was a marked anemic year. To help us understand this, let's look at one of my favorite leading forecasting tools. Now, listen to this. This is the median listing price year over year. The graph you're seeing is a crucial indicator that reveals what sellers and brokers that were on the ground bringing a property to the market, what their initial response is to what they should set an asking price based on their perceived buyer demand. How many buyers are there for my property? How many competing homes are there? How bad is the pricing structure getting in the area that I'm at? Now, one thing I want you to notice, look at this. This down the middle is the zero line. Notice going back to 2017, okay? So this is 7 years of history. Notice how many times this line ever goes below zero. Notice it does sometimes go to zero, but it is absolutely a massive anomaly for sellers a year later to be asking less than what a seller was in the exact same area was a year prior. But notice what happens. My friends, going back to March, sellers have constantly been cutting prices lower and lower. And again, what this says is that the 30, 40,000 new listings in Florida going to the market, the aggregate of them, they're being lower and lower against prior year to the point that last month we're nearly 6% below prior year. Now, to give you a clear picture of just what happens to home price when this kind of thing crashes, look at this. This is the median percent of original list price data. This metric shows us how much a seller typically has to negotiate to close a deal right now across the state. Currently, it's down to 95%. This means that sellers in our state right now, based on the competition they're experiencing, you see a declining chart here. They're having to give back around 4.5%. If they're lucky, they're getting around 95% of their asking price. Some people more, some people less, but that's the number down the middle. So let's go back to my original graph. So someone is now asking around 5.5% at the start, less than a year ago. Then understand that according to the averages, they're going to give back another 4.3% before they get to sale. All total, that could be a sale that's somewhere around 10% below prior year. Now imagine that. Remember, I just told you, I was like, oh, you know what? We have leading indicators that show that price could be dipping like 9-10%. If you factor what I just showed you, you are going to see that prices in the future are going to start closing lower and lower as we go into the fall. But just how low? Let's look at history. Notice that the last time, this is the entire state of Florida, the last time we ever dropped the asking price was only once. Even when we locked the country down, we didn't drop all the way negative, but we dropped negative in 2022. Now, this happened for just 4 months. Right now, we're below the zero line and we're way below it for now 5 months running. So we're longer now than last time. So we're longer under zero, more consecutive months, more supply going in at lower and lower numbers. And by the way, it's on the order of double beneath prior, okay? So in 2022, the most you ever saw price drop was there was a single month. Mind you, look at this. All of this time that this in 2022, when you had a 9% trail off, prices fell 9% from peak summer 22 to the end of the year. And all that time, the leading indicator went to 3% for one single month. So for us to get to a 9% pullback in price, all it took was this chart to get to 3% for a single month. The month prior, it was around 1.9. And the month after, it went all the way back up to like 0.9. It was barely, below zero. It means this time around, we went twice as far below the zero line as we did in 22. Does that mean we're going to have double price impact? I doubt it's a percent by percent thing, but I think it's conceivable to at least say that if we went down 9%, could we hit 12%? Could we hit 13% across the board by the end of the fall? There's an easy argument to be made, not to mention the fact that there's way more inventory being introduced at much bigger discounts than this entire trend here. So ultimately, you can't set your watch to exactly how this will play out in the market. However, I can tell you confidently that I believe you are going to see this dip below worse than hitting a 9% year over year average, just based on the leading data is telling us. Plus the fact the sellers, again, are having to give back nearly 4.5% after they hit the market, after they're already starting below last year, just adds up the fact that sellers are having to be negotiable. All right, friends, let's look at another interesting thing. This is the median sell price. This tells us a lot about why buyers are hesitant to enter this market. This is why, you hear the idea, the notion of FOMO buying. If I don't move now, I'm never going to get in and it's going to be really bad and really worse. Well, it's hard to argue FOMO whenever you have way more homes to choose from and the price is sliding dead even. It's not going up. So a buyer says, well, I have a confusing number of homes to look at because I remember when I used to look at my price range, there were like 4 and now there's 40. And this is happening even in the more stable markets like Orlando. Way more inventory, even at price points that are reachable. Some things I don't even talk about today that you need to know about. The $300,000 to $400,000 price point, which is below the average, below the median. It's exploding. It has way more growth because homes are falling into it and going unsold at the entry point. So particularly in Orlando, the inventory is up like 70% in the $300,000 to $400,000. There's a buyer can go to a lender and have way more homes to choose from, but FOMO buying is over. Why? Look at this. If you bought a home in July, the median sell price in Florida was $385,000. If you would have bought it a year ago, it was 1% lower. It was actually, says on this chart, it's $385,000 this year. You gained 1% by buying now. Now, if you would have bought 2 years ago to the month, you would have saved 2%. Now, here's the problem with that. This is where people really get perplexed at why aren't people just jumping in and buying? They're never going to be able to buy again. This is what current homeowners say about non-owners. How much does it cost to sell a house if you get in? If you bought a home in the past 2 years and you only made 1% or 2%, and then you have to sell that house again, and your closing costs are 5, 6, 7, 8%. They're usually not 5. They're usually at least 5.5 or 6 by the time you factor all the commission, all the state tax, title fees, all that stuff that a seller has to pay. If that's the case, you've got almost 8% in cost to sell. And we know the average down payment right now is around 10%. And many of these markets in Florida, people are only putting down 3%. Buyers look at that situation and they say, you know what? If I have to sell, I may not be able to break even. But more importantly, if I were to zoom in on just this stretch of graph, what do you see? It's a flat line. If the housing market were a patient, you'd say he was a dead man. And ultimately, buyers are noticing this. They are seeing a market that is not moving, with inventories way up. And they're questioning the motives of many of these sellers of like, why are they pricing the house so high above last year? So then you have all these sellers that are putting their house in the market, showing after showing after showing is happening. They're scratching their head going, why aren't the buyers buying? But in reality, when you look at the state as a whole, there's not a growth environment happening in real estate right now. You have to understand when the market's dead flat like this, you have some marketplaces like in Miami and some in Orlando that are still above the line a little bit. There's still a couple points. Maybe they're surfing a little bit of property value increase. And then you have the rest of the markets in Florida, many of which are beneath. They're posting declines already in terms of their housing price. I could show you comps in my market where people bought 2 years ago, putting the house back on the market, selling as much as 20% on the high side beneath what they paid for it. With high costs and more inventory, a flat price is just less compelling for buyers. At the very least, buyers are just moving much slower than they used to. And I'm not saying don't buy a house right now in this market. That's not the point I'm making. For many of you, you must buy. You don't want to rent. I fully understand. There's no reason you shouldn't. Just like I would say to a seller, not every seller should be a seller right now. Everybody should take a case-by-case look. But I will tell you this, because of the data you see on the screen, that it's crucial that you have more of a long-term ownership plan in what you buy. You want to be comfortable so that you know that house isn't going to be outgrown in 2 years, or that you're going to be dumped and possibly relocated by your job and be in a position where you're forced to sell it, especially if you have a low amount of down payment and low amount of skin in the game. In the next week, I have some of the largest markets planned where I'm going to do some deep dive on Orlando, Jacksonville, Tampa, and Miami. Major shifts happening in those markets. I'll probably try and come back, hit the Gulf, the Villages, Ocala, some of these other marketplaces as we go. If you are thinking of buying, selling, or investing, my team can help you anywhere in the country. If a subjective, data-driven approach is what you seek in getting competent help navigating this market, we're the team to help you do it. Also, if you'd like my opinion, access to live streams for Q&As and giving you insights on the market, as well as my monthly newsletter, consider supporting the channel as a channel member. Details in the comments below. And as always, thanks so much for watching. If you listen this far, jump in the comments and tell me how the market looks from where you're standing, as well as what you hope my next video is. Do you think the market is about to trend upward, or do you think price reckoning is now coming in the fall of 2024? Let's continue the discussion there, and I'll see you on the next one.